All right, it is 3:53, August 28th, coming up on the market close. I've wanted to make a video, a trading video for a long time, like months and months, and I'm just getting around to it now. Um, I've been doing this professionally now, and by that I mean it's been my full-time job. This is the way I make money for, I guess, about 4 months. However, it seems like it's been a little bit longer, and it's really a fascinating um, pursuit, and I feel like it's quite misunderstood, um, and because I really see it as a viable pathway for many people to make great money and a great living, including my family, even if it's to supplement your income. I kind of just want to do a free form type of a video series where I just kind of go through my trading philosophy, and in the hopes that it inspires or educates someone else. The thing I've learned about this is you're never done learning. The market will humble you and does humble you. It humbles me on a daily basis. There is nothing to hide behind here. You can't pretend to be good. The market will expose you. There is literally no hiding. What kind of trading do I do? Do you say? Well, I do a very simple type, right? I mean, there's all different types of traders. There's people that trades options, futures. I don't do any of that. In fact, I really don't understand too much about it, and I won't claim to. I just trade typical equities, typical stocks, and I buy them low and I sell them high. I buy them as low as I can, and I sell them for as much as I can. If it were that simple, because it's really not. The name of the game is to really manage risk, and what I should do here. Okay, so I'm getting up my monologue here. So we got a couple of movers. We got Palo Alto Networks over here. I've been trading this bad boy for quite a bit. They had a dip. That dip was, let's see, July 29th. They had a dip, and it was a great upside opportunity. The nature of that dip was, some test results came back for one of their drugs, and it was only about 11% effective, and the market wanted 13. So there was a big sell-off. When you have something like that, a great company, good fundamentals, great upside potential, nothing wrong with the stock. It just dips because the market's emotional. That was that. As you can see, we're kind of, if I zoom in on this a little bit more, we're about halfway. So if this is the bottom right here, I'll go back around August 6th, we're about halfway up to where we were before. So now, there's, a higher probability of downside potential than, on August 8th. So I'm trading carefully on this one, not trading it too much. That's my typical setup. I look for good quality companies with good market movement, good price movement. You need to have up and down movement. You have to be able to get in there to buy it low in order to sell it high, right? But, I always want like a back door. So if I execute a trade and that trade doesn't work out in my favor, well, I always want to have the option to be able to hold it. Now, there's a couple of things that make that possible. The first is just being confident in your position, that you have something at a good price. The second is being smart about the amount of money that you're putting into a trade. I feel like day trading and trading in general gets a bad reputation for being extremely high risk, and I think a lot of that comes from people that have this mentality that you have to bet your life savings on a single trade. No, absolutely, you should not do that. The whole name of the game is risk management. You always want to be asking yourself, if this doesn't work out, if this stock goes down 20% right now, what will I do about it? What's my plan? And if you don't have a good answer for that, then that's a sign that something's wrong. You haven't thought through, your position. And in this game, things are very slow until they're not. And when things happen, it can be, in a split second you have to make decisions. And if you've done the preparation, if you know what you're your philosophy is about, what your plan is, you can act without thinking. If you act without thinking, without a plan, you're gonna get into trouble. So fundamentally, it's simple, but there's some things that preparation is key. All right, now we have 4 companies that are releasing earnings after the bell. Now I have them all pulled up right here. So we have Autodesk over here on the right-hand side. We have Affirm. I love Affirm. Great. I think a lot of these legacy payment companies like American Express and Visa, I do believe that unless they innovate, their days are numbered. You have these companies like Affirm that offer 0% interest financing, no late fees. So that's a company releasing their earnings just in a few minutes here. Marvel Technologies on the bottom left, and we have Dell. Everyone knows Dell over here on the right. Now, of the 4, Marvel is the one that's the most positively regarded by investors. Now, what I'm looking for is, so right around 4 o'clock or shortly after, earnings get posted, and there are algorithms. Wall Street has these algorithms that will synthesize the earnings in a microsecond, and when that happens, there's violent spikes in the price, right? This is where you can make or lose a lot of money. Now, it's been a very slow day. It's August, characteristically very slow for the market. So really, these types of cliffhanger moments is what I've waited all day for. So I'm going to kind of calm myself down now. I'm going to get out of talking mode because I have to be ready to execute some trades. Okay, so the market closes in a minute. Now Marvel's a good company, so I'm just going to buy 12 shares as a base case. And that's $1,000. For me, that's not a lot of money. Now, the idea is if that goes down 20%, I'm fine with that. It's just $1,000 for me. And I could potentially do the same thing here. And I'll also buy a little bit of Dell too. I'm just going to buy, here we go. You're going to see very, very violent moves here. What's wrong with this? I have to refresh the page. That's not a good time to have to refresh a page, because you're going to see how violent it is. Now, once again, I put $900 down. I have $70,000 I can trade with, and I put $900 down. It's all risk. The name of the game is risk management. Now let's see how this goes. There's no script here. So we're already up at $1.80. Earnings haven't been posted yet. You'll see it. It's quite violent. I think I'm going to just 7 shares right now. 7 shares. If this goes up 20%, that's like $100. So I'm not greedy. Ad desk. Here we go. Look at that rocket ship right there. Now I missed that one. Now I could chase it, and I'm going to go in. I'm just going to buy 2 shares for $600. Let's see what happens here. All right, I'm going to put a sell order right here. Only 1 order executed. That's at $14 right there. Let's see. All right, beautiful. So that was about $14 right there. Now, here's where discipline comes in. I could chase that up. I'm not going to do that. I made 14. I'm happy with it. All right, let's see. $1.61. So these 2 haven't posted earnings yet. Do you see the explosive moves here? And even in Dell too. Now I'm gonna buy I'll buy 2 shares of Dell here. And you see the wicked price action. And again, if I put $10,000 here, which I could do, I could very easily make $2,000 in a second, but I could also lose that money. So these are moments, your adrenaline can be pumping, you're excited, but for me, there's a couple of rules that I follow that I have to be disciplined by. The first is, okay, I was late to the move. So for this one, I didn't have a stake in here. It spiked up. I followed it a little bit. Now look what the price is doing. There's a tug of war here. It's not going up. Now it could jump from here, but it could also not. Now let's look at a firm right now. We've got some upward movement right here, a possible sign something's happening. Remember, I only bought 7 shares. All right, here we go. We're going up, baby. We're going up. That's $7. That's 441. Let's see what it does. I'm really looking at Marvel though, and I could sell this right here because we are coming up on this. You could call it like a faux resistance level, but I'm not going to. I'm gonna leave. I'm gonna just see what happens. Dell's continuing to, let's see, that was on a 5 minute. You can see it spiked up. Now we're selling off a little bit. So who knows what's going on here. In fact, they may have not even released earnings yet. Sometimes that happens. There's no, oh, look at that one right there. Look at Marvel going up. All of a sudden, that's $9. It's in the green. I'm just going to kind of wait here. I'm going to see what happens. Ad desk is continuing, or Autodesk is continuing to go up. And you know what? I'm just gonna, use my. I'm gonna place a sell order here, because I don't know how the earnings were, but I'm gonna sell that, and I'm gonna make a quick $7. Let's see. That should execute. Doesn't look like it did yet. It's okay. I'm not gonna get desperate. All right, cool. So that was about $7 I made. So we're talking about little money